This was the week of AI. Hello everyone and welcome back to the channel. I'm Micha Stocks from the channel Stock Talk with Micha Stocks, and on this weekly video we try to summarize everything that happened on the stock market, or at least everything that's important in the stock market. Let's start by sharing the screen and talk about the major averages. The Dow Jones was the only one positive this week, and after beginning of the year, which all the averages were green, this is the first week of the S&P 500 down more than 0.5%, Nasdaq down 0.78%, and Russell down 2.6%. But we can see year to date, our situation is a lot better. We are positive for the year. The Dow is up 2%, while the Nasdaq, heavy on technology, is up 12.82%. So we're still green, but it's starting to crumble down a bit. When we look at our crypto markets, this wasn't a good week for the Bitcoin, which is down almost 5%, and ETH is down almost 6%. And again, beginning of the year, we are still up. Bitcoin up 30%, ETH is up 26%. When we dive in to the different sectors, you can see that this is basically a replica of 2022. Energy leading the charge with an up of 4.94%, while communication down 5.57%, led by Google, which we'll talk about Google in a second, and their big fiasco for the week. And when we dive into the US industries, we can see again oil services, and insurance leading on the green, and on the other hand, we see clean energy, retail, airlines, and internet on the red. I kept this chart here just to demonstrate that up until midweek, we were relatively okay with all the sectors, while we saw a huge divergence of energy Thursday and Friday, and huge divergence of communication going down. This is due to Google launch of Bard, and this is due to the energy crisis, Russia and Ukraine. We're going to talk about that with our news. Let's continue. This is our heat map for the week. As you can see, Amazon down 7.2% for the week, Google down 8.12%, while energy leading and becoming green again, which didn't happen from the beginning of the year. And when we look at our 17 top stocks, we can see that Google down, like we mentioned, and the energy up. Year to date, on our top 17, the company that is leading, or the stock that is leading the charge, is still Tesla, up 59%, although it had a very weak Friday. Let's start diving into the news, and the first biggest news for the week was supposed to be this discussion, this conversation between Rubinstein and Powell, the chair Fed. Powell came very relaxed, very soothing, if I'll use Lisa Abramovich's comment from Bloomberg. He came relaxed, he joked around, he talked about deflation, he talked about the tight labor, but he didn't provide any headlines, which he didn't want to provide anything, just to convey his message that the Fed will keep on raising rates and fight inflation. And he still feels that the job numbers are, or the job market is still very strong. And you'll see in a second that it's not so strong at all. But he sees a strong labor market, which is not broken yet, as of yet. But this was the week of AI. If we look at the mentions of big tech during their earnings, we can see that Alphabet increased their mention of AI by 78%, and Meta by 188%, and Microsoft mentioned 633% more, and we talked about that last week. During this week, we had two launches. One, Microsoft Bing, the other, Google Bard. Google Bard was launched during Wednesday, and was a huge mess for Google. The Bard responded with the wrong answer, and the stock went down. The company lost almost $100 billion of value. Google issues a rallying cry in an internal memo, and yes, there is a lot of heat right now because more than 50% of the revenue coming for Google is from search. If someone starts eating their pie, that is a huge problem for Google. When we look on the other hand, we see Microsoft, which is the biggest winner of this week, with Bing, with their let's call it proof of concept, or actually their presentation showing that you can search a term, you can get the regular results that you got up until now, and on the right-hand side, you can get the Chat GPT, which is the most advanced currently from our perspective, from a consumer perspective, generative AI that can chat with you and give you the answers instead of you combing the internet. And Satya Nadella, Microsoft CEO, sees the blood in the water and goes after Google because they have nothing to lose. Microsoft has about 8% of the search market, even less than that, while Google has over 90%. Every percentage point that Google loses to Microsoft gains $2 billion. Microsoft has nothing to lose in this war. Google has a lot to lose, from their business model to other areas, and that's why this is the most exciting, let's call it rivalry in the world right now, and it costs Google almost $100 billion in market cap. The result, Bing app, something that no one really downloaded. I'm sorry if you work for Microsoft, but no one really used Bing. Got a 10x jump in downloads this week. Everyone wanted to test it out. By the way, you can't really test it out because Bing is not fully deployed. It's going to be deployed step by step, but still. Alibaba, the Chinese company, is also looking to developing its own chat-like AI tools. Same for Baidu, which is the Chinese Google. They have their Ernie. Everyone is doing generative AI. Even Salesforce CRM launched their Einstein GPT. Let's get to let's call it the sadder part of the weekly review, which is layoffs. So Meta delays setting team budgets as it plans a fresh round of job cuts. JP Morgan cuts 100 more of their mortgage workers. Truist Bank, or investment bank, cuts 5% of their investment banker. eBay lays off 500 employees. GitLab announces another reduction of size by 7%. Affirm fires 19% of their headcount, 500 employees. That is crazy. Canopy Growth, the Canadian cannabis company, reduces their headcount by 60%. Zoom, 15%. Boeing, 2,000%. Yahoo, 2,000 employees. Yahoo, 20%. Dell, 6,600 employees. And Meta takes it even to the next step and says, we don't want so many managers. There are too many managers. We want our managers to go back to become individual contributors. There is a lot of tension. There's a lot of changes in the tech market and in all the markets and all the industries. During 2020 to 2022, companies grew too fast, or maybe too much. And this is not it's just an observation from the outside in. They grew very fast. They needed employees. Money was cheap and they could raise money. Now we're at 2023. Interest rates are high. They're going to stay high, and companies need to shed some of the weight. In order to do that, there's a lot of layoffs. That is currently the situation. Every earnings report, if the results aren't good and it's not added with layoffs, then the stock is going to cater to that point. Even Disney, which I didn't show, is going to reduce their headcount by 7,000 employees. They're going to go through restructuring. That is also happening. So yes, a lot of layoffs. And if we continue, if you're here on this channel and you haven't subscribed yet, it's that easy. You just click the subscribe button and then change notifications to all, and then you'll be notified every time a new video is launched. And by the way, if you like this video, a thumbs up would only help expose it to more and more people. Biden had the State of the Union this week. Said a lot of things, but related to the stock market, mainly that he wants to triple the amount of tax that corporates are going to pay while they're doing buybacks. And also, he talked about increasing the tax for billionaires. I assume most of the people that are seeing this video, not to offend anyone, are not part of that group. And if you are, that's awesome that you're seeing this video. Warren Buffett's Berkshire Hathaway is selling more and more shares of BYD. This is maybe the fourth or fifth sell in the last 6 months. which reduces their stake to around 11%. And there's a lot of questions, mainly asked by me. Why is this keep on going? Is it because the stock went up 38 times from the purchase in 2008, which is a good reason, or there is something boiling underneath the water and we are not aware of? Keep that in mind. SEC on Friday shuts down the crypto staking coming out of Kraken and orders them to pay $30 million. That created that tumble in the Bitcoin that you saw at the beginning of the video. New York Stock Exchange, you remember a week and a half ago that there was the glitch. They're going to pay 60% of the claims. I have no idea how, but they're going to pay 60% of the claims. Friday, after market closes, an exclusive by Reuters that says that the US government is going to force Tesla to unlock EV chargers. Why am I air quoting? Because Tesla already said that they're going to open up the EV chargers to everyone, and by that increasing their revenue because other cars will charge and pay. But Biden wants a win against Tesla, and if that is a win, let him go at it. Ticker MANU, Manchester United. Qatari investment group is looking to buy them. A billionaire called Jim Ratcliffe is looking to buy them. So probably someone's going to buy Manchester United. That, of course, helped the stock during the week. And we almost forgot that there was a Chinese spy balloon that was shot down. Now everyone is combing the balloon, combing the wreckage. It's in the water. Of course, not everyone. It's the FBI and the CIA, of course, and trying to figure out which of the companies helped build that balloon, how many balloons exist. And, of course, was that a spy balloon? Or like the Chinese say, it was just a temperature or climate balloon or something like that. I have no idea. Activision Blizzard got their merger with Microsoft slowing down again now because of Europe, the European Union. The UK regulators are not on board of having this done. And if they are going to object it, it's going to be very, very problematic for this merger to continue. I remind everyone that Berkshire Hathaway bought 3 weeks before the merger was announced, or the attempt to merger was announced, they bought a huge stake of Activision Blizzard. And of course, Microsoft still has a target price of $95 for Activision Blizzard. And if we were talking about Microsoft, let's talk about Apple, which reduces their iPhone prices by $100 in China. This comes as contradicting to what their CEO, Tim Cook, said a week ago, that there's no demand problem, only supply problem. Well, if there's no demand problem, why is the price going down? Does that mean Apple has problems selling in China? We don't know. We just see the results. And this also came out this week. I did not get an invite, but others probably did. Investor Day for Tesla, March 1st. And there's been debates and discussions around what does this mean? What are the small imprints here? There are some clues for it. It might be the casting of a Model Y or even a smaller model, maybe Generation 3 of the platform. We will see March 1st. This has been going to be live streamed on YouTube and, of course, on Twitter. And Jim Farley is finally facing the truth, saying that Ford has 25% more engineers doing the same work as rivals. And when he means rivals, he means Tesla. Well, Jim Farley is the CEO of Ford. Understand that there's a big problem. He sees that in their earnings. He sees all those problems. By the way, Mary Barra from GM has not yet gotten to the point where she confesses to the same problem, which probably exists in GM as well. This is the reason why oil went up on Friday. Russia retaliates for the sanctions by announcing an oil output cut, which, of course, raised the price of oil. And that brings us to next week. Next week has a lot of earnings, but put the earnings aside. This is what is going to drive next week. Tuesday, February 14th, 8:30 a.m. Eastern Time, CPI. Behind the scenes, they're starting to get a few murmurs that it might come hotter than expected. If it'll come hotter than expected, it means that the Fed will need to keep raising rates. If the Fed will need to keep raising rates, it means that the stock market goes down. We know how that works. That's going to happen Tuesday. Monday basically is a filler until Tuesday. Everyone's going to wait for that. Everyone's going to position for that. Monday, nothing's gonna happen before that, at least from my perspective. These are the companies that are going to report this week. We see companies like Palantir, Coca-Cola, Devon Energy, and Airbnb. We have Upstart, we have Shopify and Roblox, and we also have DraftKings, Crocs, Datadog, and others, and John Deere on Friday. That is going to happen. And before we look at the charts, as we do at the end of each video, let's talk about the sentiment. And I'll thank Lance Roberts for uploading this chart. This chart shows that the current market, after a very, very strong start of the year, is very bullish. When everyone is positioned negative, usually it creates that bounce effect to the upside. When everyone is bullish, usually it creates the effect to the downside. Right now, we are at a position where we are very, very bullish. Now, there are good reasons for that. The stock market went up year to date 5%. If we look back from the lows of October till where we ended Friday, we are up 14%. So there are good reasons for that. But when everyone is so bullish, usually it means a correction is coming. Now, when we go back to the same charts we see week after week, we were on a downtrend. I'm saying we were because, at least from a technical perspective, we bounced out of it. So right now, we have changed the trend, at least on the short term. From a technical perspective, this is still a breakout, which is good. When we look at the fundamentals and we try assessing where we are, and I'll try to draw here on the chart to make it easier for everyone to understand. I didn't mean that. When we go out of a recession or when we are in a recession, usually PEs drop down to around 15. Let's write here 15. And the earnings per share for the S&P should be between 200 and 210. Let's put 200. Let's go to the low case for a second. When you multiply this by this, you get to an S&P of 3,000. Will we go down all the way to 3,000? Friday, we ended at 4,100. Will we go down to 3,000, or will we increase the PE to be 19 maybe? By the way, 19 brings us to 3,800. Will we increase the earnings per share to 210, which brings us higher to where we are today? I don't know. All I know is all the math right now cries for some kind of a correction. Whether it's going to be a big correction or a small correction, I don't know. But I do know that both the charts and the fundamentals talk about a correction. That doesn't mean that all the stocks are going to go down. It does mean that there might be. And I remind everyone, this is not financial advice. This is just my opinion, of course. We will see in the next few weeks. If you enjoyed everything you saw, it would be amazing if you can smash that like button. And of course, share the video with others so everyone will be able to summarize their week and get ready for the week ahead. Till next week, till the next weekly summary, I'm Micha Stocks. Bye-bye.